Traders, in today's video, we're going to talk about the different entry models for Smart Money Concept, and I'm going to be touching the 4 popular entry models. We have the order block, fair value gap, breaker blocks, and flip zones. I'm going to break this video into parts. So in today's video, we are going to focus more on order blocks. So make sure you subscribe, turn on the notification bell, so you would be notified when other videos drop, and be updated. You get the point. So let's go to the chart, guys, and point out valid order blocks together, and also how to take smart entries from these order blocks. Let's get to the chart, guys. Let's get to understand the idea behind order block and what it means. So from what I have here on the screen, you can see that an order block is a price zone on the chart where big financial institutions, like banks, hedge funds, etc., placed large buy or sell orders, leaving behind a strong footprint. So have it in mind that order block, I will call it the most popular entry point for Smart Money Concept strategy, and I use it too. At the end of this video, I would get to show you how, I map it out on the chart, take my entries, things I look out for on the order block, and the rest. So this is actually an important aspect of Smart Money Concept. Once you get to understand the idea behind order block and how to strategically map it out, and entries in the market won't be a problem. So make sure you watch to the very end. So why is order block important? Now, from here, you can see that order blocks are important because they show where the strongest players in the market, institutions, place their orders. As you are trying to make money with your little capital and the rest, we have the market movers. Those that their orders can, shake everywhere in the market.
So that's what we mean by, the institutions, the banks, central banks and the rest. So the order block will show where these institutions, place their orders. And then, since these players, they move millions, their footprints become valuable zones for traders. And now prices often react when it returns to an order block, making them strong areas for entries, stop loss placement, and take profit targets.
So you can see from the illustration I have here, once there is an order block, we get an impulsive move, and that impulsive move will now break a structure. So the idea will be to wait for price to come back into the other block. If the break of structure was to the upside, we will be looking to buy once price, get back into that order block. And if the impulsive movement and the break of structure was to the downside, we will be looking to sell once price, gets into that order block. It's very important. Now, let me quickly show you guys the rules to follow on how to spot valid order blocks. So on how to spot valid order blocks, I've listed 5 important tips here. And number 1 is the trend matters. It is important for you to know where the market is going. The market structure, break the market down, and know where it is pointing at so that you will align. The popular statement, the trend is your friend. It is important you know where the market is going to so that you will follow too. Because when you are following the trend, the probability of your trade playing out will be much higher than when you were going against the trend. And then the last candlestick in an accumulation is actually the order block. So when you are trying to map out your order block inside a consolidation or accumulation or inside an origin, look out for the last candlestick. That's your order block. And now the next one here is a break of structure. So have it in mind. Before you even start looking for your order block candlestick, you must have pointed out a break of structure. Because once you see a break of structure, the next question is, what causes the break of structure? The impulsive move that cleared the structure. Where is it coming from? And now, once you point out the accumulation that happened before the possible move that causes the break of structure,
you now need to look for the last candlestick reaction before the impulsive move. Highlight it, because that is your order block candle. And it's important you highlight it very well so that you will not miss out on your entries and the rest, because there are times the price would just come and just give it a little tapping and move to your direction. And if you don't highlight it well to place your entries well, you would see the market leaving you out, and then you would miss out on trades that would have given you a good, massive profit in the rest. So make sure you highlight it well, the last candlestick in an accumulation, and have it in mind. That order block must cause what? A break of structure. And it's also important that you point out the imbalance, that is the fair value gap that I have here. It's important you point out imbalance very close to the order block. that would make the order block more valid. It will be more strong for you to take trades from that particular order block. Because personally for me, any order block that doesn't have imbalance, I'm not really comfortable with it. I need to see that imbalance, present before I will tap that order block as valid. And now liquidity must be present before price will tap into your origin. Make sure that, you've been able to map out liquidity that price will clear as it is trying to tap into your origin. Because if there is no liquidity, your origin or your order block will be the liquidity. And then you will see price clearing you out, hitting the stop loss before it will still move to your direction. So make sure there's liquidity price will clear before it will tap into the order block. So this is a bearish structure and an example of a supplier zone, which I have highlighted here. Let me also show you guys the example of a bullish trend. And after that, I'll show you guys, some of the trades I have been able to catch using order blocks.
Like I said earlier, this particular entry model I love and is one of the entry models I use, to catch my entries. I used other blocks more to catch my trades. So I would also show you guys some of the smart setups I have been able to, catch using order blocks. This is an example of a bullish other block. You can see from the illustration here, we got a change of character. And the next thing you need to look out for is where is the accumulation that happened before the change of character. And now, from that accumulation, you do what? You look for the last candlestick reaction before the impulsive move that cleared and caused that change of character or break of structure. That is what you would highlight as your order block. And like I said earlier, your imbalance must be present, which is what I have also mapped out here. Either imbalance or fair value gap. So, that's actually a gap, price create in the market. And it's also one of the entry models, which I would be explaining, how you can also catch smart setup using imbalance in our next video. So make sure you subscribe and turn on the notification bell. And then liquidity must be present. If there is no liquidity, you are likely going to be the liquidity. So make sure there's liquidity price will clear before tapping into your order block. Let me show you guys some smart entries I was able to catch using order block entry models. If you can remember the first illustration on how to spot order block, you can see that this is actually the entry. Once the break of structure happens, just highlight it. The only thing you need to do is to patiently wait for price to come and tap into that particular order block and print out a clean movement. And you can see how price got there and mitigated the order block and then moved straight to take profit. Now, when trying to, put your stop loss and your take profit inside the accumulation, look out for the last wick rejection. You put your stop loss a little bit, above the last wick rejection if you are trying to sell, or below the last wick rejection if you're trying to buy. Some people may try to refine, tightening their stop loss, but this is how I place my own stop loss, so that I will give the market to, dish out good moves. Because I wouldn't want price to tap me out and then print out the movement when I'm trying to tighten my stop loss. So this is how you wait for it. And I know some traders will be asking, why don't you buy to sell? At the end of the day, you can still be able to catch the correctional move, because any move that is against the trend, we call it the correctional move. You can still be able to buy to sell, depending on the confirmation you've seen. But we're not talking about correctional moves today. I just want you to understand how to map out other blocks and how to take smart entries with order blocks. So once you map it out following the rules I stated earlier, once you map out the other block, so what you just need to do is to set your pending order and patiently wait for the price to come there, tap you in, and then pop out good results. Make sure you apply proper risk management, because you understand that trading is risky and your capital is at risk. So no matter how clean you think your setup is, you can still lose your money. But at the end of the day, this is a strategy I have tried out. Particularly, you see how it looks. Just this illustration alone is explaining the strategy I use, because most of my trades are always from order blocks. So let me also show you guys another entry. So this is still coming from the bullish order block. That is from the illustration I showed you guys earlier.
You can still see how the price tapped into the other block and boom, straight to TP. So when you're also trying to set your TP should always be at the point of reversal. That is where the correctional movement started from. That is where you place your TP. Because price can come there and, retrace almost back to entry. So it's important for you to be very realistic when setting your TP. And you can also see how I place the stop loss. I always pay attention to the last wick rejection inside the accumulation, and my stop loss will just be a little bit below or above the last wick rejection.
Some traders push it just a little bit below or above the other block, but I consider the last wick rejection. So it all depends on the one and how you want to do it for yourself. You just need to do your back testing and then make sure you know what you're doing as you are taking your trades. So in our next video, I'll be breaking down how to take entries with the fair value gap. Remember, we are talking about the entry models for smart money concept, and we've been able to explain that one of order block. This one is pretty much popular. So in our next video, we'll talk about how to catch smart entries with fair value gap. I would see you in the next video.